Hi, Nzinga. Well, the JSE down, like you said, world markets looking for direction, concern about the tax cuts. We were up very marginally yesterday, down now about 1/3%. And the big focus on the rand after it hit a more than a year low yesterday, talk of free education, fears about the downgrades. I think those fears are still there, but the rand seems to have recovered against the dollar and the pound, which are both weaker. So we'll ask, is that what's giving us a bit of reprieve for now? First, let's take a look at your main financial indicators. All right, live at the JSE, I'm joined by Lee Riley from IG. Thank you for being with us.
Thanks for having me.
So the rand figure there, 14.40 yesterday, we were at 14.52, so that's more than 10 cents. Is this a big recovery, or is it just a factor of the global currencies?
I think it's actually just a bit of a pullback based on some of the moves that we've seen. We saw a really strong breakout above 14.25, which is our previous sort of technical resistance that we would have been looking at from a price action point of view. It's quite a big day around central bankers. So we've got Janet Yellen, Governor Carney, Governor Kuroda, and Mario Draghi all at an ECB conference today discussing fiscal policy and monetary policy going forward and how it's going to have an effect on inflation, and specifically in Europe and in the US, where it seems like one is very dovish, and in the US slightly more hawkish, a little bit more aggressive. So the intent is to raise interest rates. Throw into the mix that it looks like Theresa May is going to be in a situation where she might have a vote of no confidence, and we've seen almost 0.75% pullback on the pound against the rand. So I don't know whether it's so much rand strength as it is more weakness in some of the major currencies, which probably bodes well for a couple of other currencies outside of the rand as well.
So in broad sweeps, can you explain how we fit in this global picture? So in the US, interest rates going up, in Europe maybe coming down, or certainly in the UK, expectations possibly interest rates coming down. Very different, and are we just somehow caught in the middle?
Unfortunately, yes. So we're kind of swept up by the tide of international politics and information and news. If you look at the majority of our most heavily market-weighted or market-capped companies within the top 40, so the likes of Richemont, Billiton, and Naspers has gotten in excess of a 21% weighting on our local bourse. So all we need is for a reaction in the dollar or in Tencent in Asia. That can be up 1-2% on the day. If none of the other counters are up on the day or fairly flat, we can still finish up from an index point of view because of how those stocks are weighted within the top 40.
So the JSE is so international, in fact, and the fact that it's down 1/3% today, do you think that's another sign that actually a lot of our stocks have been benefiting from the weaker rand?
Not all of them. We would have expected stronger moves from companies like Steinhoff, which has been weaker on a bunch of other information or for other reasons. But we definitely would have expected a little bit more of a push from other rand hedge counters, which make up more than 50% of the top 40. And I think that's one of the reasons why majority of asset managers or long-term wealth managers have found this market so challenging, because the fundamentals and what is taking place with a couple of stocks don't really marry up, given the local political issues and the potential for further weakness in the rand, coupled with rising interest rates in the United States, so strength in the dollar, and slightly weaker sentiment in Europe in that regard. It makes us a very international community of stocks, essentially, which makes it difficult to trade, which means that we should see a little bit more of an uptick in some of the other counters, but volumes have still been relatively low. There's been a fair amount of selling in most stocks. And unless you were really in some of those top three, Richemont, Billiton's, and Naspers, again, you wouldn't have seen as much of the upside of the index as you would have thought.
So moving from that international view to the local factors, like you mentioned, politics. Is a downgrade certain in your view, and is it priced in as it were, or could we still see a weaker rand?
We could still see a weaker rand. Nothing is ever priced in at this stage, I think, given where we are in the year. Nothing is ever certain. The fact that Michael Sachs resigned from Treasury, and there is concern that Treasury will be controlled by the state, and fiscal consolidation or saving will not be initiated in the way that most corporates or even ratings agencies would have expected, will be a negative effect for our economy, especially given the fact that the weakness of our currency is effectively out of our hands. It's more in the hands of the US. So come 24th of November, there's a high probability that we could get a ratings downgrade from Moody's. But if we have a turnaround in the next week and we have a statement released that maybe Michael Sachs has been reinstituted, or the steps taken by the budget or released in the budget will be abided by, then that could be an instant turnaround. So it's difficult to see whether it's going to be priced in. We could be at 15 Rand come the end of next week. I think it's important to just hedge against that and make sure if you are trading or you are investing that you're managing your positions appropriately.
All right, we're running out of time, but quickly, some company results. Life Healthcare, interesting, and rough diamond sales is something that affects De Beers and Anglo. Just very quickly, what do you take out of those two?
Life Healthcare, so reduction in HEPS, in headline earnings per share, mostly attributed to some changes in regulation in Poland, as well as the cost of the acquisition of Alliance Medical. And then also, this was released after market yesterday. Interesting that the share price is up today, so it seems as though the market actually likes the results and they're being pretty upfront with the statement. And then Anglo's not as good as the same period from last year, but better than period 8, from where it was significantly lower production or output coming from some of the Indian providers or producers. So still pretty good for Anglos. I still think they're a buy at these levels. It looks like a bit of a bullish consolidation to me, and I'd be looking for a decent entry around these levels.
I wish we could continue to talk about diamonds, but thank you for your analysis. So we have to leave it there. From the JSE, from me and Lee Riley from IG.